It off with our first guest on the show. Man Industries is a stock on our radar. The board has approved the issue of 68 lakh shares at a price of 367 rupees per share. The stock is actually at a fresh 52-week high. RC Mansukhani, the chairman at Man Industries, joins us now to talk more about that. Mr. Mansukhani, thanks a lot for joining and appreciate your time today. If you can just start by telling us what will this 250 crores be used for? Will it largely, be for investments, or will you be using this money to pay down your debt?
This money raised because of our Capex program is going on in India and abroad. This will be partly used over there.
Okay. So can you just break it up for us? How much will be used? You said partly it will be used there. How much for Capex and how much for reducing your leverage?
Yeah, the Capex is approximately the 800 crore. So the debt, 175 crore out of 250 crore will be utilized in the Capex program, which is will be completed in this calendar year, and the balance will be some working capital requirement as well as the general corporate purpose. So this is a 250 crore utilization.
All right. Hi, Mr. Mansukhani, and good to see you. And your investors must be very interested to know what's the outlook from here on, because in the last 1 year or so, the stock has gone up, I think, 300 to 350%. And you had taken some warrants a couple of years back, I think at a price of around 65 rupees. Now, post this particular, dilution of shares, your holding, what does it come down to? At current reckoning, it comes down by around 4% approximately, because the dilution is around 10%.
Yes,
Could you tell us? But you have warrants as well. So what is the outstanding warrants after conversion? Where does your holding go to? Yeah,
the warrant is 183 rupees. We subscribed around 6 months before. And that is not a 60 rupees. That is not a right. And the other thing, this total money utilized for the Capex program, which is going on of the company. And what was your second question about the utilization?
So what happens, sir, in the last couple of years, you have done warrants even at a lower price, which you have been converting gradually. As you're telling us, the last warrants were issued at 183 rupees. So have they all been converted? As of the last shareholding, the promoter group holds around 50%. So post conversion of these warrants and post the dilution of equity, what will your holding go to? Yeah,
then will be after the post effect will be around 47%, rather than right now it's 52 point something. So now it will be the after effect will be 47% of the promoter equity.
Got it.
Okay, so promoter holding will go to 47% post that. Got it. Just one follow-up. Earlier you had said that 175 crores of this money will be used for Capex, but you also said that you have a total Capex of around 800 crores. So the rest, how do you plan to raise the money? Will you be raising debt anytime soon? And can you just give us the absolute number on what are you comfortable holding your debt level at?
Yeah. Right now the company debt is a surplus. Right now, almost no debt on the company as regard to current position. But we have got the sanction of around 400 crore rupees from our consortium banks for the complete the Capex program. The Capex will be the 400 crore from the new loan, which is the subsidiaries company, not in the main company. And the balance, this money will be utilized. We are putting the equity in subsidiaries company to complete the project. So this will be completed, the project in this current year.
So you won't be raising any fresh debt on the books of Man Industries, right?
No loan in the Man Industries, nothing over there. It is a debt company, and we are doing very well. The order position is comfortable, and EBITDA is increasing. So that's why the bright future.
Okay, all right, Mr. Mansukhani, so you're sounding quite confident. You're debt-free, you have 800 crores of Capex. And the 800 crores of Capex, bulk of that is going to be to the ERW facility, which just got commissioned. And also the stainless steel tubes.
No, sir. ERW is completed and production started.
Correct, which just got commissioned, sir.
Yeah.
And the stainless steel tube unit will come on stream as well. So both those two will help you in terms of revenue growth from here. My question to you is, with this current Capex, that will get commissioned, say, in FY25 at some point of time, and you'll get the full benefit for FY26. What will your revenues look like? And as you said, your margins as well will improve. Obviously, stainless steel tubes, they command much better margins. So from this 6-7% margins, what can your margins go to? And what will your revenue outlook look like for FY26? Please go ahead.
Yeah. Currently, sir, our margin because of the water pipe 6 to 8% and the island gas around 11 to 12%. So overall, EBITDA margin average weighted will come around 10%. And after the completion of the expansion program and the diversification program, our EBITDA we are expecting roughly 600 crore. I'm talking about the total revenue in the 25-26, as well as the volume will be the revenue will be the double than whatever this year we are doing around 6,000 crore. So we are our guidance and expectation reach the 6,000 crore in a year and a half and within 2 year program and better EBITDA 600 crore.
Okay, all right. Mr. Mansukhani, we get that. So you're guiding for 600 crores of revenues in 26 with 10% margins. Got that.
Yes,
the other point is in the last few years, we used to always hear about some real estate that Man Industries had. And then obviously you all had that settlement between promoter entities. So as of now, in the listed company Man Industries, is there any further real estate or all of that is settled?
No, real estate is settled down. No further project. But the one project we recently did the one we are in the verge of completion of the deal where the company will get the revenue around more than 500 crore in coming years, and that agreement which is going on, and it will very shortly we will announce in few days that is completed. So that is the under final documentation.
So how much have you received of this 500 crores that you're talking about in the real estate deal?
We will receive in coming years around 500 to 600 crore revenue, and there is no debt, nothing is there. The debt will be the net revenue to the company in coming years.
All right, we leave it.
Which is addition to the regular business. Which is addition to the regular business.
Thanks very much for joining us, and good luck, sir, as you move forward. Appreciate you joining us here on CNBC-TV18. Amnish Aggarwal is